This is the Financial News Network. I'm Christy Duffy. The largest U.S. credit card company reporting its fourth quarter earnings Wednesday after the closing bell. Speaking with me now about Visa's results just before the conference call is Mayank Tandon, analyst for Signal Hill Capital Group. Mayank, how have CyberSource results incorporated into Visa's fourth quarter earnings?
Well, the impact was only about $40 million in revenue and about 2 cents EPS dilution from CyberSource.
And how did the quarter compare with your own estimates?
I'd say really focusing on the fourth quarter, the expectations were for 93 cents and $2.1 billion in revenue, and they did a hair better than that. They came in at 95 cents and $2.1 billion in revenue for 13% growth. I'd say net it was a modest beat relative to both my numbers and street expectations. But really looking through the numbers in detail, I'd say the most important thing is we saw decent growth on the payment volume side, which is really what investors want to focus on.
Consumer sentiment has been depressed throughout Visa's fourth quarter. How has this impacted the company?
Well, I think we'll have to see how that impacts in the December quarter, because in the September quarter, I think they continue to benefit from consumers traveling. So you saw good cross-border volumes. That drives that portion of the revenue stream. And also we saw overall good growth in credit and debit. So I think the most important factor here is that people are using their cards to make payments. So the secular shift is so strong that is definitely, I think, overwhelming some of the cyclical factors.
Do you expect Visa to offer any gauge on the call on the impact of the Dodd-Frank bill? Last quarter, CEO Mr. Saunders said in the quarterly press release that it was too early to accurately size up the impact of the Wall Street Reform and Consumer Protection Act.
I think they need a little bit more clarity in terms of what the ground rules will be from the Fed. So we'll probably get a little bit more information potentially early next year. I think at this point, they'll really focus on reiterating their guidance and talk about the flexibility of the business model, but not really get into the nitty-gritty around the impact of the Durbin legislation, which is what you're referring to.
And how concerned should investors be about banks trying to offset their own regulatory impact by taking actions such as scaling back on debit cards?
Well, I think the market has already kind of discounted that for the most part, in our opinion. We think the impact will be manageable for Visa and for MasterCard. And clearly, again, there are some questions around that, what the exact drop in the interchange will be and how that will impact Visa and MasterCard. But, Visa and MasterCard's fees only make up a small fraction of the bank's interchange fees that they collect. So we may see some short-term impact on volumes, but it's really hard to change customer behavior. The consumers are using debit cards increasingly. I think they've gotten used to the convenience factor, and also the fact they don't have to take on credit with a credit card. So I think, again, we may see a short-term blip, but from a longer-term perspective, I don't think we'll see a material impact in terms of debit card usage. And the banks will push that because at the end of the day, it's more cost-effective for them, and it's a great way to create a sticky consumer.
Do you expect Visa to take any near-term action to fend off the encroachment of smartphone swiping? This, of course, is what allows consumers to pay with the contactless wave of a smartphone.
I think for mainstream adoption of smartphones being used for payments, it's really early days. So I think Visa is investing, and so is MasterCard. Again, it's early days. I think eventually we'll see Visa and MasterCard be involved within the smartphone payments segment. But at this juncture, I think it's not mainstream and not really disruptive to their business in the near to medium term. Longer term, I believe they'll be there. They'll provide more clarity on that over the next several quarters in terms of what they're doing specifically.
Visa has seen its shares lose more than 20% since provisions came out in Frank-Dodd to restrict card fees. Where do you see the stock headed?
Well, we have a target of mid-90s, and we believe the reaction was overdone. Again, we think the impact will be manageable, and the secular shift to card payments remains very strong, which is really what we want investors to focus on. So we think we can get back to a multiple of 20 times forward numbers, and on that basis, we think Visa can trade back into the mid-90s, which is where it really was before the Durbin legislation hit the stock.
Can you offer any guidance for Visa's fiscal year 2011?
Well, the company is reaffirming its guidance of 20% plus EPS growth. We think they can do at least that or slightly better. They're also talking about 11 to 15% revenue growth and 60% or higher operating margins. Those numbers are consistent with current expectations, but we think those expectations are conservative. And if the economy cooperates, we think Visa could outperform, as they have over last fiscal year.
All right. Thank you, Mayank. For further updates, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.